All right, everyone, so it's now 12 p.m. Eastern Time, so we're going to get started with today's presentation. I just want to thank everyone for joining us today for the presentation on the EU Place of Supply Changes presented by that resource, Taxware and Convey Compliance Systems, three organizations that recently merged to form an alliance of trusted global compliance advisors who provide end-to-end tax and regulatory solutions. My name is Rebecca Hale, and I'll be your moderator for today's event. Before we get to the presentation, I'd like to cover a couple of quick housekeeping items. First off, all of today's participants will be on mute for the duration of the presentation, so if at any time you do have a question, please type it in the Q&A box on the right side of your WebEx panel. If there is time at the end of the presentation, we will host a Q&A session and we'll respond to them at that time. We do have a lot of people on today's webinar, so if we don't get to your specific question, please feel free to reach out to us individually. Also, today's presentation is being recorded and it will be provided to you along with a copy of the slides and a follow-up email from me in the next couple of days, so please watch for that. I also wanted to let everyone know that today's webinar is CPE eligible for 1 credit in tax compliance. In order to be eligible for the CPE credit, you must attend the entire webinar and participate by answering all CPE polling questions. If you adhere to these two standards, you will receive your certificate within 30 days of today's broadcast. So that brings me to today's first CPE question. Are you planning to apply for CPE credit for attending today's webinar, yes or no? The poll is now open on the right side of your WebEx panel and will be open for a minute and a half. While you're answering the question, we're going to get started with our presentation. With me, I have Jeroen Lensveen, Head of Product Management EMEA at that resource, a Taxware company based out of Amsterdam. Also joining us for the presentation is Jill Grenier and Tim Feinstein. Jill and Tim are both lead tax counsel in the tax research department at Taxware. I will now pass this over to Jill to kick us off.
Great, thank you, Becca. Hi, everybody. I'll just be going through the agenda. First up, we will, I'll actually review the changes effective January 1st, 2015, a brief overview, and then we will get right into how Taxware is addressing these changes for calculations, and my colleague Tim will go through some scenarios in our system, Taxware Enterprise. Next, my colleague in Amsterdam will be going through the new reporting requirements under MOS. Then he will discuss how Taxware is addressing these changes for reporting. Finally, there'll be a Q&A. Great. So first of all, I'll start out by talking about the general rules as it applies to B2C supplies and services in the EU. Now, when I say B, I mean a taxable person, a taxable business, and when I say C, I mean a non-taxable consumer. These supplies are sourced in the location where the supplier has established its business under Article 45 of the EU VAT Directive. This means that if the supplier is established in the EU, the supplier collects VAT from the customer based upon the rate at the supplier's location. So for example, a business set up in Luxembourg supplies consulting services to a French consumer. The business, the seller in Luxembourg, collects 17% Luxembourg VAT under that rule. So what's the problem here? What kind of issues are there with the general rules? So first of all, a big issue is it provides an advantage to certain sellers who could charge a lower VAT rate. So for example, a company established in Luxembourg would charge a rate of 17%, which by the way is the lowest standard VAT rate in the EU, whereas a company established in Hungary would charge 27% for the same service. So, as of 1/1/2015, the supply of certain services to non-taxable persons will be taxed at the location of the customer under the revised Article 58 of the EU VAT Directive. These are telecommunication services, broadcasting services, and electronically supplied services. These services are best known as TBE services. You'll see that very commonly out there. Also, in the interest of time, I will be focusing on electronically supplied services, which are services delivered over the internet or an electronic network, and the nature of which renders their supply essentially automated and involving minimal human intervention and impossible to ensure in the absence of information technology. So what's considered an electronically supplied service? Well, here are some examples. So first off, downloaded or remotely accessed software, website design, database access, downloading or accessing music, films, or games. But be careful here when trying to decide whether a certain service is considered electronically supplied. So for example, live training over the internet would not be considered electronically supplied. So if you could take a look at the Council implementing regulations, it'll give you several more additional examples of what's considered an electronically supplied service and what's not. This slide compares the rules for B2C electronically supplied services intra-community before and after 1/1/2015. So pre-1/1/2015, these supplies are sourced to the location where the supplier has established its business, just like I spoke about earlier. Come 1/1/2015, these supplies are sourced to the location where the customer is established, and the seller must register, collect, and remit VAT at these locations. Please note that there's no de minimis turnover threshold to collect at the customer's location. So one can see where it would be quite burdensome for sellers to have to set up, register, and collect in each and every member state that they sell these services to. So for example, a supplier established in Luxembourg sells electronically supplied services to a consumer in Hungary. Pre-1/1/2015, this would yield a 15% Luxembourg VAT. However, currently, it would yield a 27% Hungarian VAT. This is where the mini one-stop shop comes into play. An EU-established B2C provider of electronically supplied services has an option to elect the union scheme simplification, and this is also referred to as the mini one-stop shop, or MOS. This closely relates to a scheme that already exists for non-EU suppliers to EU customers. This is known as the non-union scheme, and my colleague Jeroen from that resource will be elaborating a bit more on this point later in the presentation. Under this scheme, the supplier can identify the union scheme in the EU member state where it has an establishment. Please note here that the supplier can only have one member state of identification. The supplier then collects VAT on electronically supplied services from its EU customers based upon the rates at the customer's location. Next, the supplier will electronically file a single VAT return in its member state of identification instead of registering and filing a VAT return in each and every member state. The VAT return will identify the total sales, VAT collected, etc. per state. The member state of identification will later distribute that VAT collected to the appropriate member states. And here are some additional points to mention. The union scheme is optional. A supplier will retain the ability to register and submit VAT returns just as it normally would. Also, the supplier is not able to use the union scheme for sales to non-taxable persons in the member states where it already has an establishment or fixed establishment. Next, a supplier that has a principal place of business or headquarters in the EU must register for union scheme in that country. If the supplier does not have its head office in the EU, the supplier must register for union scheme in the country of its fixed establishment in the EU. If the same supplier has multiple fixed establishments in the EU, they can choose one of those. So what's new in Taxware Enterprise? So this is where the fun stuff comes in. First of all, we have a new registration status, established plus union scheme, which Tim will be talking about a little bit later. We have updated logic to determine customer type, business versus consumer. This is very important because the new rules are centered around B2C supplies. Next, there are additional CITES rules to calculate the correct taxes. We here at Taxware have created over 1,000 new place of supply rules. There are also error messages for validation of new status. So for example, if you set up union scheme, established plus union scheme in the UK, and then you go ahead and you try to do the same thing in Germany and set up established plus union scheme, the system will throw an error and let you know that you can't do that under the law. Next, additional audit information, tax decision codes, what we refer to as TDCs, are available to identify MOS transactions. And the new union scheme registration functionality can only be utilized in TWE version 8.4 or higher. So those clients out there that have an older version, you have to upgrade to 8.4 or higher if you'd like to use this functionality.
So this brings us to our second CPE question. Does your company currently sell electronically supplied services in the EU? That question will be opened at the right side of the WebEx panel. I'm now going to pass it off to Tim, who's going to go through a demonstration in TWE of the changes.
Hello, and we'll have a quick demonstration of the Taxware Enterprise engine and how it handles the 2015 changes. These will be just a couple of examples, but hopefully this will provide an idea of how Taxware addressed the changes. What you see on the screen is a user interface for Taxware Enterprise. Most of our clients do not see the screen because they connect directly through their ERP systems, but this is a good screen to run scenarios and to test transactions. For the first transaction, we will look into a situation where an organization identified for union scheme in the United Kingdom and does not have any registration in Germany sells electronically supplied services to a non-taxable person in Germany. And first, let's look at the obligations of the organization. When we look at the organization's status in the United Kingdom, we see that it's set up with established plus union scheme there. This is the new status that Jill mentioned earlier, and this means that this organization has an establishment. Let's assume in this case it's an EU organization and it has its principal place of business in the United Kingdom, and is also identified under the union scheme for MOS in the United Kingdom. Next, if you look into organization's obligation in Germany, we see that there are not any obligations set up for Germany. Now we're ready to run our transaction. In the interest of time, we save these transactions ahead of time, and we'll now pre-populate them. What we see here is that this transaction is a sale. It's dated today. It's taking place in the euro currency. The amount is 1,000 euro, and the goods service code, which in this case is 2037796, corresponds to downloaded software. And this is how Taxware Enterprise knows that this is an electronically supplied service, because behind the scenes, the code for downloaded software in Taxware Enterprise is set up to pick up the place of supply rules for electronically supplied services. Further, if we look at the additional details of the transaction and we look at the customer detail, we will see that there's not a registration number provided for the customer. Because there's not a registration number provided for the customer, Taxware Enterprise knows that this is a business-to-consumer supply rather than a business-to-business. When we look at the locations, we see that the order recording takes in the United Kingdom. This is how we know that the services are provided from the United Kingdom in this case. The build location is in Germany, and the location of use is also in Germany, and this tells the system that the customer's usual residence is in Germany, and therefore the services are supplied to a German customer. When we click Calculate Tax, the system calculates 19% German VAT. Even though the organization, as we saw from the setup earlier, does not have an obligation set up in Taxware Enterprise in Germany, the system automatically picks up the established plus union scheme status set up in the United Kingdom, and therefore still calculates German VAT as the taxes due at the place of the customer's location. At the bottom of the screen, we see that the registration number used in reporting is the UK number for the union scheme. This tells that the transaction belongs on the VAT MOS return to be filed in the United Kingdom. Additionally, the output also delivers the transaction decision code, which tells how the system arrived at the decision. And in this case, the transaction decision code indicates that these are electronically supplied services to non-taxable person inside the community, and that the supplier is registered under the union scheme in the location where the order was received. This is an example of a transaction, B2C transaction for electronically supplied services when the supplier has registered under the union scheme and when the supplier does not have an establishment in the country of customer's location. Now we will look at a slightly different transaction. It's the same organization, just bear with me for 1 second, with the same obligations, but it also has an establishment in Italy, as we can see from this screen. In this transaction, the electronically supplied service is being sold to a consumer in Italy. When we click Calculate Tax and load this transaction, we can see again that it's a sale dated today. The transaction takes place in euros. The amount is 1,000 euros. The goods service code used in this case is different. It's 2042469, which you can see on the left corresponds to downloaded books. And while downloaded books are still electronically supplied services, and the system applies the same place of supply rules as it would for any other electronically supplied service, special taxability rules apply in certain countries, as you will see a little bit later. Again, for our additional details of the transaction, we can see that there's not any registration number passed for the customer. And again, this tells the system that this is a business-to-consumer transaction, B2C. For the locations, again, our location of order recording is United Kingdom. This is where transaction originates. The bill-to location in this case is Italy, and the location of use is in Italy as well, telling the system that the customer's usual residence is in Italy. When we click Calculate Tax, the system calculates second reduced rate in Italy of 4%. So as in the previous example, the tax is applied in the customer's location. Before 2015, the tax would have applied in the supplier's location, namely United Kingdom. Here, the tax is applied in the customer's location, and additionally, if you look at the bottom, you will see that the organization's Italian registration number is being used in reporting. That's because, as Jill mentioned earlier in her presentation, the supplier in this case has an establishment in Italy, and therefore it is not allowed to use the union scheme for supplies to Italian customers. And therefore, this transaction has to be reported on the normal VAT return in Italy, on the regular VAT return, rather than on the VAT most return in the United Kingdom. Additionally, the transaction decision code for this transaction also indicates this. It states electronically supplied services to non-taxable persons inside the community. Supplier is established in the bill-to location. Also, the output screen for this transaction indicates that the good service code, good service-based rule is applied. This is because after determining the place of supply in Italy, the system now checks to see if there are any particular special taxability rules for the good service code. And in this case, the transaction is for downloaded books, and effective January 1, 2015, Italy applies a second reduced rate of 4% to certain electronically downloaded books that have ISBN symbols. So in this case, rather than applying Italian standard rate of 22%, the system applies the second reduced rate of 4%. And this concludes the brief demonstration of Taxware Enterprise. Again, just to reiterate, these are just examples of possible transactions. There are many other transactions that the system handles.
Thank you, Tim. So at this time, we're going to go into CPE question number 3. Has your organization made all the necessary adjustments to account for the 2015 place of supply changes? And while you answer that, I'm going to pass it off to Jeroen, who is going to elaborate on MOS and also discuss the change in malware.
Okay, thank you, Rebecca. So let's dive a little bit deeper into the reporting obligations under the mini one-stop shopper. As my colleagues have mentioned before, under MOS there are two schemes available, the union scheme and the non-union scheme. The union scheme being set up for businesses registered and established within the EU, and the non-union scheme for businesses established outside the EU. So to determine which scheme is relevant for your business, we have included a very useful decision tree which was published by the UK Tax Administration. So let's have a look at this decision tree. If we would follow this tree, we would start the first thing to check is whether you're actually supplying eligible supplies under the mini one-stop shop arrangement. So are you supplying to private consumers, and are your supplies broadcasting, telecommunication, or electronic service supplies? If the answer to that is yes, and the next question would be, do you have an establishment or a place of business within the EU? If the answer to that is no, you could consider registering for non-union MOS scheme. Then the next question would be, do you already have a VAT registration number in any of the EU member states? And if the answer to that is no, you can register for MOS in any EU member state. So this is an example how you could follow and come to the right decision in all situations. So once you've established that you are eligible for registration for MOS, the question is how to register. If you opt for a MO scheme, you're required to register for this regime in the so-called Member State of Identification, the MSI. For the union scheme, the MSI will be the member state in which a taxable person has established his business. So if a German company with headquarters in Germany will actually have to register for MOS within Germany, being the member state of identification. For the non-union scheme, a taxable person can choose any member state. So any of the 28 EU countries can be chosen to register for the non-union MOS scheme. How do you register? Well, a taxable person is required to provide certain information to the member state of identification and does this by an electronic form. And within this electronic form, he submits a number of data for which we have included an overview in this presentation slide. It's personal details, address details, banking details, contact details, also specific details with regard to the type of supplies, the date you start with these types of supplies, etc. Let's go a little bit deeper on the VAT returns, which you have to submit once you are registered for MOS. So a taxable person that's using either of the MOS schemes is required to submit by electronic means a quarterly MOS return. And the period covered is a calendar quarter. So each calendar quarter a MOS VAT return must be submitted electronically within the member state of identification. If a taxable person did not make any transactions within a certain quarter, calendar quarter, he is still obliged to submit a so-called nil return. The MOS VAT return and the accompanying VAT payment is required to be submitted within 20 days of the end of the period covered by the return. So a return submitted for the first quarter of 2015 must be submitted and paid before the end of the 20th of April. The MOS VAT return contains details of supplies made to customers in each member state of consumption. And the member state of consumption is the country where your customer is actually based and consuming the electronic service. The member state of identification, which receives the overall VAT return, splits the MOS VAT return by member state of consumption and forwards all the specific details to the various MSCs. The member state of identification also generates a so-called unique reference number for each MOS VAT return and distributes this number to the taxpayer. This number is important because a taxable person must make reference to this number and it's making its payment of the VAT to the member state of identification. For the submittance of a VAT return, each member state has or will create a so-called web portal that will allow the taxable person to upload VAT MOS return data by electronic means. And this can be done by either using a specific XML or CSV format. It's also good to know that on a MOS VAT return, you can only list sales transactions. If a business, a taxpayer, incurs any VAT on business expenses in any of the member states of consumption, this input VAT cannot be offset against the VAT charged on supplies, like is the case on normal VAT returns. VAT on those expenses actually has to be claimed by via the electronic VAT refund mechanism, either the ones for EU business or the one for business established outside the EU. But it has to be recovered separately. And there's also rules for currency conversion. A member state that's not in the Eurozone can actually require that most returns to be made out in the national currency. An example of that would be the UK, where the most return has to be submitted in GBP. And where this happens, all the currency conversions made by a taxable person must be made using the exchange rates published by the European Central Bank on the last day of a tax period. So, if you take, for example, the VAT return for the first quarter of 2015, the last day of the reporting period would be the 31st of March 2015. And the exchange rate published by the ECB on that date would be applicable for currency conversion. Correcting returns. If you've made a mistake, you have to make an adjustment, and you have to do this by making a correction of the original return. You cannot make any amendments to any later returns. So mistakes made in the Q1 2015 return cannot be adjusted in the VAT return, for instance, for Q2 2015. You have to resubmit a return for the first quarter of 2015 in that situation. Corrections are made electronically and must be made within 3 years of the date on which the initial return was required to be submitted. And then finally, payments. VAT is due to the tax authority in the member state of identification. So all VAT that is listed on a return is paid to the member state of identification. And the taxable person pays only one total amount for the most VAT return. The money is then distributed by the member state of identification to the different member states of consumption. So that's the obligation of the tax authorities within the member state of identification. There have also been set rules and regulations around record keeping, and specific statements have been laid down on which records must be kept by a taxable person in relation to the most schemes. And that data contains elements like the member state of consumption of the supply, the type of the supply, the date of the supply, the VAT payable, details of payments on account, and information to determine the place where the customer is established. And these records must be retained by a taxable person for at least 10 years. And this 10 years starts from the 31st of December of the year during which the transaction was carried out. And then finally, audits. For audit purposes, the European Commission has made a recommendation to use a so-called standard audit file for MOS, also known as the SAF-MOS. And this has to be kept and provided in case of an audit in an XML format. Most of the member states are following this recommendation, almost all of them, and will accept the SAF-MOS format in the XML specification as the right way to supply audit information. There are unfortunately still 3 countries that have not accepted this recommendation, Germany, France and Italy, so they can still set their own regulations around the audit information. So how is Taxware addressing the reporting changes for MOS? VetResource is part of the Taxware group, and VetResource is a European-based company which focuses on tax technology and vet compliance outsourcing services. And for our international customers, we have developed a so-called web-enabled vet reporting and analysis application, which is called Vetware. The Vetware application, well, what does it do? It has the capability to analyze the vet treatment of large volumes of purchase and sales transactions. And it can, for instance, verify vet identification numbers. It can also verify the vet calculation. And you can set up all kinds of analysis based on the data that is fed into the application. It also reconciles vet reporting data with the GL vet accounts, ensuring that your data is complete before you do your final reporting. And it automatically completes indirect tax returns, such as VAT returns, EU sales listings, intra-stat, any country-specific returns, and also vet sales and purchase letters. And it does that for all 28 EU countries and a number of additional countries like Switzerland, Norway, and also countries like South Africa, Australia, New Zealand, Turkey, and Russia. And we're constantly adding new countries. In a recent release, we have also added the specific MOS returns both for the union and non-union scheme. And the completed return information within the Vetware application can be downloaded in various formats, including Excel, CSV, and XML, which makes it easy for electronic submission and audit purposes. Like I was saying, Vetware has been recently, we had a recent release where we included the most quarterly reporting obligations for both the union scheme and the non-union scheme. This is basically done in 3 process steps. A user would import transactional data that could come out of any system, an ERP system, or any other transactional system, including also the TWE application that was shown earlier. Once the transactional data is uploaded into the application, it can be used to generate the MOS return, which can be viewed on screen. And this MOS return can also be exported in Excel, CSV, and most important in the specific country XML format. So it can be easily uploaded onto the websites, the web portals of within the member state of identification. In the next slides, we're going to show some print screens of the Vetware application, specifically regarding the MOS reporting. And obviously, for any interested parties, afterwards we can always set up a customized live demonstration where we could even use your transaction data to show how this would be processed within our application. So within this demo setup and the print screens I'm just going to show, we have basically set up 2 companies, one for the non-union scheme and one for the union scheme. For the non-union scheme, it's a non-European company established outside the EU, which has chosen to be identified for MOS within the UK, and therefore is obliged to report submit its MOS returns within the UK. And we have set up for the union scheme a German company with head office in Germany and one fixed establishment in the UK. And out of both locations, this company is supplying most relevant services to various EU private individuals. So first, we're going to show quickly the one-time setup requirements in order for our application to be able to read correctly your transaction data and correctly distribute it to the right boxes in the mouse return. And then secondly, we will show the user experience that is on a quarterly basis preparing and submitting the mouse returns. So for the one-time setup, a user or account administrator would log in the web portal of the Taxware application and would get into his own account in specific own environment. He would see this screen and he would press the edit button and then select the tab companies shown here. The account administrator would then provide a unique company name that he's going to set up. In this case, we have given it the name Most Webinar Non-EU Company, and would save that company. And then when he gets into the company edit overview, he would add a new record with specific company details, such as the member state of identification, in this case the United Kingdom, the administration type, which is MOS, his VAT number in the member state of identification, the VAT number type, the company code as listed within your own host ERP system, and some additional information. Once this is saved, a company is set up within the system. Then, assuming that this would be an overview of the transaction details coming out of your host system for this company registered in foremost within the UK. In this case, we're showing an Excel sheet, but it could have any kind of format such as CSV or text or XML. But for this demonstration purpose, we show this Excel overview with transactional details on a line item level. In order to upload that transactional detail, as part of the one-time setup, and so-called import profile needs to be created within our application. The account administrator does it again by going to the edit button, press the tab import profiles, and then create a so-called import profile. He gives it a name, in this case most import profile 1. And then he gets into a specific section called import profile create. He selects the file type, he selects the file that he's going to upload, he gives it a name, in this case the most webinar import profile, and presses next. Then he provides the file properties, in this case which worksheet, and information about the first row, the header row, also details like the decimal separator and the thousand separator, dates separator and date format, all to be able to correctly read and upload the information. Presses next again, and then the final step would be the mapping of the column headers, the data column headers within the file to be uploaded, and mapping to our defined column headers in our application. And we have defined about 60 plus of those column headers with also a whole number of flex fields, so we can basically upload any type of information that's provided for in the transactional data upload sheet. And examples are, for instance, the company codes, the invoice number and invoice date, currencies, VAT amount, transaction amounts, and all kinds of transactional details. Once this is done, this mapping is finalized, the import profile can be saved, and a user is ready to start importing data and processing returns. Like I said, this is a one-time effort. Once this is done, the company and import profile can be used anytime a user logs in and wants to upload information and process returns. So over to the quarterly user experience, assuming that the company and the import profile have been set up. The user would then log in and would start importing data. And he would go to the tab Import, select this, and then would see the screen, the import screen. He would select a file, and this file can be stored at any location, either on his own laptop or desktop computer, or on a server or any other environment in the cloud or anywhere else, as long as we can point to that location. The user would select this file and would then attach it. User would select the import profile created and would select also the company for which the information, the transactional details are being uploaded. If only one company is set up within his account, then this company would automatically appear. After that, the user presses import. The data is being imported into the application for processing. This import process is clearly shown the status, and it's also shown the number of rows, transaction line item rows that are being imported. When this is finished, a user can look at the import batch that he has uploaded, so you can see the date and time of the upload, the file name, his own username, the first and last report date, and also the company for which it has uploaded. This is especially handy when a user is using this for a longer period, and many transaction batches have been uploaded in the system. The user could easily scroll to these batches in order to look if everything is within the system. When he has uploaded the information, he goes to the report button and then selects most report for the non-union scheme in order to start reporting on the data. When he has pressed this, he selects the company for which he's reporting. He selects also the date range. So in this case, the first quarter of 2015, and he presses generate in order to generate the most return. A user will then see on screen an overview of the most return to be submitted to the local tax authorities in the member state of identification. First part is the general reporting information that contains details like the company, member state of identification, the VAT ID number, the VAT period, also the reporting currency and the unique reference number. And the second part contains transactional information on a line item level. I'll show you a little bit more on that. Such as the country of consumption for each supplier, the service type, the rate type, the rate, taxable amount in transaction currency and reporting currency, basically all the details that are needed for the most return. A user could then press export and select the file type on which he wants to export, and there's various file types like I mentioned before, such as Excel, PDF, CSV, and also the XML type as required on the web portals of the member state of identification. So let's first show a output in an Excel format that's basically similar to what we've seen on screen in the application, and it gives you an overview of all the transaction records and the required most return information. And of course, it can be downloaded also in the XML format as required for the web portal of the member state of identification. This can be easily uploaded then within this web portal. I quickly want to show also the most return for the union scheme. In the one-time setup, the company edit, I just want to show now we have actually two records, one for Germany where the company is actually established, and it's, you see here is the VAT number, the VAT number type, company code, and secondly a line for the United Kingdom where he has a fixed establishment and this VAT number within the UK, the VAT number type, and some additional information. So this is this way our application is able to distinguish between the transactions linking to the German establishment and linking to the UK establishment. Again, a user would go in, press the import, select the file, select the import profile and the company, and presses import to import the data. Once the data is in the application, the user presses report and selects the union scheme VAT return and presses generate, and then he would, after he has specified the correct reporting period, and then he would see again first the general data with company information, again the member state of identification, VAT ID number, the VAT period, as well as reporting currency and unique reference number. In the transactional information, there would be two header levels with total amounts, subtotal amounts, one for the establishment for the German VAT number and one for the UK VAT number. And with a click on those transactions, you would see the details per VAT number. Next slide, we show you the Excel output of this, and here you can see the line item transactions aggregated by the VAT number for Germany and the VAT number for the UK. So it's we're able to correctly report for both establishments. And again, this could also be easily exported in the right XML format for electronic submission in the member state of identification. Last part that I want to show is the built-in exchange rate conversion functionality within our application. The Taxware application has a daily feed from the European Central Bank with the daily exchange rates of the euro versus most of the imported currencies around the world. So we always have a daily rate, exchange rate available within our application. This could be useful if the data in your host application only contains the transaction currency, and if your transaction currency would, for instance, be US dollars, and you have to report for most in the UK, you would have to convert that into GBP for reporting purposes. Our application can be set up as such that this is done automatically in the background, so you don't have to worry about that against the correct currency for any specific reporting period. And this, like we showed before, would be both the currencies would be listed within our application. When you generate a report, you would see the output in the transaction currency as well as in the reporting currency. And this concludes my part of the demonstration today. And we go over the next CPE question 4. So I hand it over back to Rebecca.
Yep, thank you, Jeroen. So this is our final CPE question. Is your company reporting transactions under the MOS simplification, yes or no? That poll will be available in the right hand of your WebEx. And while you answer, Finn McLean just wanted to speak to you quickly about who to go to for further information.
I'd like to thank you for attending our webinar today, and I hope you found it to be interesting. If you have any questions about our Vatware or other products, please don't hesitate to reach out to me. My contact details are on your screen, and I look forward to hearing from you. And thanks again for attending our webinar today. Rebecca, back to you.
Yep, thanks, Ben. So we've come to our Q&A portion. We do have a couple minutes left, so I just wanted to make sure we got to one question. The question is, do these changes impact a business-to-business transaction at all?
Hi there, this is Jill speaking. So these changes do not impact B2B transactions at all, meaning business to business. The changes impact B2C, business to consumer transactions only.
Thank you, Jill. And if there are no more questions, I'll just wrap up and we'll get done a couple of minutes early. I just wanted to thank our speakers again for the valuable information at today's event. Also, our event has been recorded and it will be available to you along with a copy of the slides in a few days. That concludes our webinar today. Thank you all for joining and have a great afternoon.